Hello and welcome to the Walk Around podcast powered by JM&A Group. If you are in the automotive business, you have found the right place. I am one of your hosts, Mark Spoto, joined always by Elliot Schor.
Hello, hello.
And today we have the pleasure of welcoming Joel Bassam to the podcast. He is the president of Eastern's Automotive Group, and they are based in Virginia, but they have 8 retail locations throughout DC, Maryland, and Virginia, and they are an independent used car dealership. Joel has been the president there for almost 2 years, and before that, he has held basically every area of a dealership's operations in his experience. Now, Elliot, this was such a unique conversation because, for one, and we mentioned this to Joel, we're so grateful that he reached out to us to be on the podcast, one of our first guests who have done that, and he shared incredible insight about the business.
Yeah, it was great to get an independent used car dealer on to share, kind of some grievances with the industry, but really some better insights on how a dealer that is bound by nothing goes to market.
Right, it's a whole new perspective. So let's take a walk around with Joel Bassam. Well, Joel, welcome so much to the Walk Around podcast. It's a pleasure to have you join us. And Elliot, I think this may be a first where a Walk Around listener reached out to us to be on the podcast.
Yes.
So we are thrilled to make that happen, Joel. Welcome.
Yeah. I'm honored to be the first, and I'm a fan of the podcast, and just thought I could offer an independent perspective in more ways than one.
Yeah, and that was the funny part. And for all you out there who don't believe in the power of LinkedIn, well, believe, because we wouldn't be talking here with Joel if it wasn't for LinkedIn and the power of LinkedIn. But what was funny to me, and let's just go right there.
Sure.
What was funny was that Joel reached out and was very complimentary of the podcast,
which we love.
Thank you, Joel. And but you did have a but in there, right? There was you guys really focus on the franchise car dealer. I think there's a perspective of the independent used car dealer that needs to be heard.
100%.
I saw it and I'm like,
he's right.
He's absolutely right. So I guess, Joel, what caught your ear, or what? Right off the bat, as an independent, as a serious regional independent used car dealer, right? We're not talking about mom and pop, buy here, pay here's, right? We're talking about fully staffed facilities, 8 retail locations that look like franchise dealerships.
Sure.
There's a significant brand, that has helped develop. So
official partner of the Commanders.
That's right.
But tell us, Joel, what were you, what caught your eye about the podcast, and what were you really alluding to?
Yeah, I mean, so it's kind of, in my opinion, an unfortunate theme of the overall kind of automotive marketing space and internal communication, where there really is almost exclusively a focus on the new side and changes and evolutions on that side. And that's incredibly important. And there's no doubt that that's where a majority of the investments and changes happen in our industry. But, as anyone who sees those numbers, we talk about SAR this and SAR that, and it's pacing what this year, and it's going to change, and it's been manipulated. But that used car number has always been kind of steadily double, if not a little bit more, in that number. And of that, generally 25% of that, I think this year it's about 44 million is what they're pacing it out to be. There's about 25% of that will happen on the private market. So even if you take that out of it, it's still double SAR. And, as much as I like to say there's kind of 3 buckets of dealerships, the big independent player doesn't get talked about a lot because rightly so, there aren't a lot of us. And a majority of our market is that kind of mom and pop dealership. That being said, those collections of mom and pop dealerships make up for 20 million transactions annually. So it's nothing to kind of be stepped over or not talked about. And the reason really what really drew me to reaching out, because I've been listening to you guys for a while, was you guys were a few episodes ago, and based on where this comes out, it might be a few more episodes ago, when you guys were talking to your transportation partner, which was a great podcast. Reach out to him on LinkedIn afterwards and see if we can get stuff together. Was you guys talking about the number of dealerships and whether he had groups in his space? And I think the number that he was quoted is, you guys said there were 16,000 dealers or so in the country. And I'm like, well, actually, there's, almost 40,000 dealerships, and most of them are independent.
He's so right.
Those are the ones.
How insulting can we be?
And the funny thing is, we're insulting the biggest part of the market.
Absolutely.
Exactly. Yeah. But, it's funny. It's just a different mindset. So most of the independent dealerships, I kind of lovingly say, are like, a good regional, like restaurant or like a dentistry office, like solid, does well, supports the community, does, has a good family business, has probably 8-9 employees, retails maybe 20 cars a month. And I've seen this firsthand by going to NIADAs. And if you've never attended one of those, I'd recommend it as at least an experience to understand the true difference in scale between a regular independent and a standard or even 1-point franchise dealership. But
I didn't even know there was an NIDA.
Yeah, well, I mean, it's a great advocacy group for the groups overall.
Wow.
But the scale of the conference is slightly, it's
not quite an NADA.
It's unbelievable how much smaller it is, but it's still phenomenal. NADA is still generally where we go, but we're a little different. So what you guys alluded to, if a regular dealership does that, we with 8 retail locations, we'll retail about 10 to 12,000 used cars a year. That total revenue will be anywhere from 200 to 250 million. So it's a decent amount of metal we're moving.
So Joel, let's get into it. Let's start sharing that perspective from the independents, especially over the last couple of years, and how the retail environment has been impacted going back to COVID, and now with inventory constraints and demand. What's been your side of the industry when it comes to just the retail atmosphere right now?
Yeah, I mean, I would say the biggest thing right off the bat is there's a general trend of dealerships have been doing great over the last couple of years. And, maybe now it's time to give it back a little bit. That being said, in the independent space, which again, I'll say this one more time, is most of the market has not been doing as well. Just, our transaction costs have gone up, our cars have become less affordable. We naturally skew more subprime just because of the collateral that we carry. And our general, and when I say I mean independents, generally we cater towards an average consumer. We always like to say we sell cars to the hardworking men and women of DC, Maryland, and Virginia, which you can't tell I'm a marketing guy, right? So that average consumer is the one who's really been left behind throughout this kind of inflationary period in the used and new space. And even though new side is starting to see some positive growth trends, it's still the average cost of those cars being, tapping 50 grand means that, the teacher still isn't buying a car anytime soon.
Right.
Your nurse, your bus driver, your regular people are still really struggling to find the right vehicle for them. And that's been our struggle. We felt it too. So we've seen, even though our gross profit per unit has been steady throughout the last few years, our volume has dropped. And that's kind of been the shared use case across the independent space that we've seen. And I don't see that changing anytime soon, especially with the retraction of some banks. And one of the things that affects independents a little bit differently than a regular franchise dealership is because of our position in the market, we tend to be the first to get excluded from any changes to lending programs. So if you have, a bank that has exceptions for independents, those exceptions get revoked. And if you have you're the only one, for instance, like we were actually supposed to be the only independent on a cap 1 floor plan. And I'm kind of worked out that we ended up not being the first because of the recent announcement they've made, but that's always the case. And there's some, valid reasons behind that thought because of our access to collateral, meaning the vehicle itself is worth less when we're selling it initially. But that's been the biggest trend of this year. It's hard and it stinks because I want to sell more cars to more people, not just because I want to make more money, but because I generally feel like we serve a really important purpose in the market that's not met by new car franchises. And we're unable to do that because of the market conditions.
Yeah, that's really fascinating. It's a fascinating perspective to hear that. Have you guys been reaching further into the higher mileage, older game in order to just really, satisfy the teachers out, the college students out there, the people that need reliable transportation? How have you been addressing that?
That exactly what you said. I mean, we call them guardrails that we would keep up with our buying. 2015, our average car was two years old and had 35,000 miles on it. That number has almost doubled on both of those facts, and our average transaction price has increased.
Wow.
And that's not, something that anyone who looks at macroeconomic data in our industry would be shocked by, but it doesn't change the fact that consumer is paying more for less, basically, because that's what it's currently worth. And while, short term, we're making that retail sale and we have our gross profit per unit, long term for that consumer, when they're trading out of that and they have that trade-in event in 2 or 3 years, assuming that like we do and a lot of other people do, that depreciation will start to creep back into the market in the latter half of this year, they're going to be in a very difficult position, carrying probably a ton of negative equity. And it's going to create its own kind of let's say, struggle that every franchise will have to deal with that. And that'll be across the entire spectrum of new and used.
Yeah, it's a real problem. I actually have an example. My family member of mine just over the weekend here totaled a car. All good, safe and sound, but it was actually just a bumper issue, but the vehicle was totaled. He got $15,000 from the insurance company, and he's asking me, what can I get for $15,000?
Not much.
Right. Yeah.
Down payment is,
and I haven't looked at that price point, in a while. And I was looking on Auto Trader, right, or a couple of the websites that aggregate used vehicles. There was literally nothing reasonably reliable to get.
100%. Yeah, you're spot on. That segment of the market doesn't exist. There's no way to sugarcoat it. There's no way to talk around it. That was our meat and, kind of our meat and potatoes side of the business. And it turned the fastest. We made the least amount of money, but there was always volume there. Those cars just don't exist in the marketplace whatsoever. So we always said we like to find cars in the teens. Then our wholesale department, now they would say those are twin-teens. That car, you're talking about 2-3-year-old Nissan Versas, for instance. That's always the example that we use, because that's been a very successful car for us. Those cars are 2-3-year-old cars that are bringing at or more than MSRP. Because another part of the story that doesn't get told on the news side is, and actually one of the things that we talked about when we were preparing for this was, the car dealership guy in that Twitter account.
Yeah.
And, he just tweeted out something recently, which was the percentage of new vehicles sold that were under $25,000 dropped from 24% in 2018 to 4% in 2013. And that doesn't shock me at all.
Wow.
And when I've spoken to other partners that I've worked with, they expect new car prices to continue to increase into the future, which means that those entry-level models at the new side are going to continue to not exist. And when they don't exist at that, they don't become used cars. And so the whole ecosystem flow of that is not going to get solved anytime soon. It's like you introduce a new predator to, a coral reef, and now we're trying to figure it out. The vintages of 21, 22, and even the kind of laggard effects that we saw into a little bit of this year, fleet leases not getting served, and manufacturers continuing to almost exclusively produce even high trim levels on entry-level cars. It's going to mean that those used cars, those affordable used cars, don't exist to become used cars.
Right.
So it's not going to change.
Joel, are you here to say and make an announcement that you are that car dealership
is this a walk
guy?
around?
No, gosh, I wish.
I have a feeling you are that car dealership guy on Twitter. No,
I think I have a good idea who it is, but no, it's a great follow for anyone, and I think that person, I'm assuming it's a guy, but it doesn't, not necessarily the case. I think they do a great job of kind of explaining things to a non-automotive specific. I think that's why it's been such a successful account. Is you don't have to be a dealer or even in the dealership space to kind of understand the points of it. But it's a great account. And honestly, one of the things that we didn't talk about is a big reason that I want to talk about it is I think if you want to make a statement, you want me to make my sure thing. I think independent dealerships are better operators than new car franchises on the whole, because we have to be.
Interesting.
We don't have any inherent blue sky value.
Right.
Our only value is to be profitable to the dealer principal, as opposed to any sort of building towards any exit event.
Interesting. So that's a great point, and I think double click on that.
Talk more.
Now that we've established you're not the car dealership guy,
I've got my Hague report right here, ready to go.
but Joel, to the reality of what you're saying, and we've talked previously, but you actually were a franchise new vehicle dealer, correct? And you've gotten out of that game because of this exact fact that you're talking about.
Yeah, just like CarMax. not that, we did it first, but whatever. You're right. So let me quantify this a little bit. So I said initially that one of the biggest things with independents in the current economic climate is that they're going to be the first ones to kind of get removed or cut off from certain access. And so you kind of scale that back a little bit. That also means that there are doors that aren't open to us as independent franchises. So, and there's some valid reasons and maybe some non-valid reasons for that existing. We'll push those aside. The reality is there are entire franchises, or entire lending establishments that say we don't work with independents. Just period, end of story. It's a policy that they have written. And so some independent groups and independent groups that I know very intimately and know well will actually begrudgingly buy a new franchise in order to gain access to those things. And access might be lending partners, it could be floor plan relationships, it could be product sales like you guys. I mean, it doesn't, there are entire segments of the markets that just say that we don't work with those. So finding a truly scaled independent, that's another reason why they're so far and few between, is because generally speaking, even if you start in the independent space, you bring on a new franchise to open doors that then sets you off to the races. And there's a lot of successful partners that have, or successful players in that space that really are used car operators, but have new car franchises in order to kind of check that box on the form, more or less, in order to gain access to that next level of growth. So you'll see that a lot of times. I bet you can anecdotally think of anyone in the region, and maybe some listeners can think of it, where there might be a couple store used, and then all of a sudden they buy like a Mitsubishi franchise, or
you're right,
kind of one of the, I don't mean this in a negative way, let's say lower tier franchises. You're like, oh, that's strange. And then, that then catapults them to the next level.
Right.
And so you take the next layer of that back is, the reason that those things scale and the large groups like Lithia and stuff have these, blockbuster acquisitions is in that market space, there are set multiples based on the franchise. There's established blue sky transactional cost when you're buying into an existing franchise point, whether it's an open point or one that you're acquiring. And there's good reason for that. You get market exclusivity, right? You're gaining something in return for that, let's say, burnt cash. And then it's your job to then be reliable. And your EBITDA, which would grow that cost based on you being a good or bad or average dealer, that matters too, but it matters less.
Right.
You still have this blank check that's almost guaranteed. Even if you run the thing into the ground, haven't made $1 in 10 years, if you got a Toyota franchise and you have literally made no money for 10 years, still worth $20 million. It's just what it's worth.
Right.
And if you're an independent dealership and the same thing happens, you're worth nothing.
Right.
If you own the land, it's worth nothing because, and this is and I wouldn't say it's an argument, but this was the conversation I had with Alan Haig. I'm lucky enough to have dinner with him last NADA. With a couple other players, and it sounds like I'm name dropping, but it was me, Dale Pollack, and Alan Haig. It was a great little dinner, and a couple of the great dealers. And that was the conversation. He said, he looked me dead in the face and said, in independence, blue sky is the dealer principal. And so if there's an acquisition event and they're gone, there is no blue sky because there's no value. Because the only value we have is the operation, and the operation is generally the principal.
Which forces your operation to be that much sharper than the next guy. So tell me, how are you taking advantage of that? What are things that you guys try and do, maybe from a customer experience perspective, or things that you try and do to differentiate from those franchise dealers because you can and they can't?
Yeah, I think that's exactly it. I mean, the beauty of it, I can try everything, and I have no pressure or requirements or change. The flip side of that coin is there's no co-op money, but I will take the freedom over that any day of the week. And when I talk to other, generally the people I speak with in the market because of our scale are new car franchises, and they say, well, we can't do that because of this. And that's a really common thing to hear. It's like, well, I can't even really look into that or try that because of this. And that means that everything for us changes. Like we can change the way that we pay our staff. We can change the modeling around our reconditioning. We can change the way that we acquire vehicles. If one bank isn't working, we can just move on. And that freedom is really what we have gained through that. And so there's lots of things that we do different. A couple of kind of key examples of our operational efficiency that we've built because of that freedom is, we are a full hub and spoke model. So I'm currently in our Sterling corporate headquarters, which is a part of our hub. Altogether, it's about 20 acres or 160,000 square feet of warehouse space. And it's really just our brain and car factory for our operations. So everything that would ever happen from a GM's responsibility or back of house responsibility for a dealership happens here. And all of our 8 retail locations, we call them delivery centers because they only have sales staff. So in this corporate headquarters is marketing, HR, legal department, tag and title work, products cancellation and remittance, acquisition, wholesale, pricing, inventory management, reconditioning, body shop, photography, you name it. Anything that happens to make a dealership run happens here. So because of that, and that kind of, let's say that's a fixed or semi-fixed cost, as we continue to scale and add spokes and this hub stays the same, we become that much more profitable.
Right.
So for us, even though we're looking at this year's forecast as being not positive, just to sugarcoat it a little bit,
right,
we still are aggressively looking to expand. Even though everything else is tight about our business, we know that if we can add 1 more spoke, 2 more spokes, 3 more spokes, if it contributes anything to the middle, its net return is that much greater. So you think about companies like Tesla, for instance, and their return on the announcement they made was spectacular. With every $1,000 they sell on a Tesla, they get back like $260, I think, or something like that. So it's the same thing with for us, we're kind of at that threshold now. And as we add stores, because at every store point adds very little to our actual overhead expenses.
Interesting.
It contributes significantly more to the actual bottom line of the profitability of our dealership group. And another little neat thing about it is because I don't have a shop, I don't do any customer service, I can buy kind of whatever I want when we expand. So good example of that is my store in Frederick, Maryland was a movie theater. My store in Alexandria was a garden center beforehand.
Wow.
I'm looking at properties that were once Macy's. It doesn't matter to me because I don't have to convince the county to put in an oil water separator because I'm, storing oil and stuff like that. I'm just selling cars. I'm really just putting up sales desks and office and parking things in a parking lot.
Do you find that customers will ask you for recommendations on, for service? And have you established partnerships with providers along those lines?
Somewhat, yeah. I mean, generally speaking, what we've always said is if it's a BMW, go to a BMW dealership, and here's a great one that we've worked with in the past. Because most of our stores have relationships with dealerships in their general area because of warranty work. That's the only thing that we're going to send out. So, if anything, I think we can actually get stronger in there to have better relationships with referrals for service. That being said, we always want to kind of do it for the benefit of the consumer. So, I'd never want to kind of muddy the water there and make it kind of something that it isn't.
So Joel, I'm curious, as you look at growth and expansion, of course, you got to have the inventory, right?
Yeah.
So this is something that we've talked a lot about in terms of the used car market and just how crazy it is. And you see all different types of strategies, whether it's kind of sight unseen appraisals or, with you not having a service drive, it's kind of limiting in that sense that you can't acquire. So from your perspective, what are you guys doing in terms of acquiring inventory and what's that look like now and then in the future?
Yeah, I mean, I think I still believe fundamentally in the health long term, maybe not in the short term, of the auction model and the importance and role that it plays in, again, the full ecosystem of the market. So that's where we acquire most of our cars. Just to be totally clear, if we're talking 2019, 99% of my cars come from auction. The only reason that number has decreased, besides just raw lack of availability, is because we've taken off those guardrails, we've held on to more of our trades.
Yeah.
And so one of those factors I mentioned before about the difference between independent and new, our trades are of lower quality because they're, someone who bought used, probably buying used again.
Right.
That collateral probably has even more miles on it that second time around. It still has purpose and value and it'll be sold to someone else, but it doesn't fit our business model. So, we'll wholesale those cars at a really, really high rate. That rate's declined dramatically. And we're holding on to more of those trades. So for us long term, I still believe in the auction model and we have phenomenal relationships with our auctions. So that comes with scale, and that's kind of hard. That's something that's really hard to talk about with other independent operators. But because of the amount of vehicles that we buy, we have really unique relationships with our auction partners. But there's no doubt that evolution of that space and the dealer to dealer space is there's opportunity for growth there. There's opportunity for growth or buying off the street. I think that to me, that's the biggest trend that will evolve more.
Right.
That 25% or so of used car transactions that happen in the private market. How do dealerships get more involved with that process and be beneficial for the customer? Really, I mean, we're experimenting with that right now pretty aggressively because currently we're really disengaged from auctions because of how much they've climbed. We were one of the few dealerships that I've spoken to that kind of, and all this credit goes to my father, who's been buying cars. He's been our sole buyer. He's our CEO and founder, still incredibly active in the business, still buys most of our cars, and is truly our CEO and founder. And he was like, no, there's going to be a bump. I'm telling you, everyone else is wrong. And we all thought he was crazy. But he was 100% right. And so we had stocked up in November and December prior to that massive increase we've seen this quarter.
Right.
We're living off of that. All that to be said, we are experimenting heavily with buying cars off the street. So that wholesale team that was generally buying cars from auction are now plugged into Craigslist, Facebook Marketplace, and trying to buy cars off the street. And we've had some moderate success there, but it's a muscle that we're not very good at.
That is interesting.
Yeah, look, hey, you got, whether
it's a whole new channel.
I mean, whether anyone, if you're in the business of selling pre-owned vehicles, you got to figure out where to get them because we've already talked about there's the inventory out there. But I wanted to shift gears a little bit, Joel. I had two questions for you, to different topics, but again, just contrasting the perspective of your view versus the view we typically do have on here, which is a franchised new vehicle type of view. We've talked a lot about modern retail and online transactions, and obviously Carvana has sort of made famous the independent used car dealer, but with no brick and mortar, right? And I'm curious, Joel, clearly you believe in the brick and mortar, right? As evidenced by the way you guys run your group, but not having the boundaries. We hear about a lot of OEMs, sort of forcing their dealers down a path with their customer. And there is clearly a battle that's going on right now between who owns that customer experience? Is it the dealer? Is it the franchise? In your case, you're not bound by anything. So what is the state of modern retail for you in terms of how you're approaching the quote unquote online transaction and in your perspective and in your group?
Yeah. I mean, I would say I am bound by something. I'm bound by the customer, they're my algorithm. They're my guiding light. They're, my, whatever you want to call it. I want to meet them where they're at. And so Carvana to me was and is a successful experiment in proving the use case that there's a market to be had in any market in the car space for a fully hands-off and deliver to your home experience. So, I think it was on your podcast, but people will look at what's currently going on with them and say, throw the baby out with the bathwater, but they have done a lot right. I was like, my way of putting it for Carvana is they did everything that dealerships did really poorly, really well, and everything that dealerships do really well, very poorly.
That is fantastic.
And
I've heard. That is easily the best. That I think is a quote that will be up. Thank you, Joel. That was awesome.
Yeah, sure. I remember that's actually, it's funny, just to go back to it. That's what Alan Hague's like, with their website's great. I'm like, if I could lose $150 million a quarter, I could build you a hell of a website. But no, all jokes aside, like they really have an incredible UX, and it's one that I lust after and want to build towards. And so for me, like, we want to say, what does that mean? Like, if Carvana had at its peak 1% of the market share, okay, maybe on the adoption curve, that's about where they're at. Where's the rest of the consumer base in that space? And really, what purpose are we going for with our modern retail strategy? And I do like that kind of rebranding from digital retailing, because digital retailing became such almost like a useless term, because it could mean you had a payment calculator website, and it could mean you delivered to the doorstep. And most dealerships are somewhere in that spectrum. So our current space, we use Roadster as our platform. We're actually one of the original investors in that before they were acquired by CDK.
Oh, wow.
And Roadster as a platform really has enabled us to meet the customer where they're at and allow for a non-linear experience for a consumer to start at any point in the car buying process and decide if they want to basically buy the entire car from their couch and have it delivered, or just save a little bit more time in the dealership. And that's our value proposition to the consumer. I think we package it nicely, in my opinion. I'm biased, but with our new slogan, any car, anyway for everyone. And that's meant to kind of say it in a few different ways. One, we sell assets from, I guess, not really 10,000 because those cars don't exist, as I said before.
Right.
It's like 20,000 in today's market to 150,000, and the spectrum from, first-time buyers with no credit to prime. And then really the last part is customers who say, I want to do the whole car purchasing in store, just like I have for years, or a customer who says, I want to, do everything online. I don't even want to see the car until it shows up on my doorstep. And the reality is most customers are somewhere in the middle, and that's what we continue to find.
Right.
And to me, it's all about the numbers. Like, what matters to me most is customers engage with these products when you offer them to them. They ask less questions when you offer them education. And if you can answer their questions before they have them, they become that much more engaged, and then they convert that much higher. It's not like a philosophical exercise. For me, when I turn a customer from a lead to what Roadster calls an order, they show at a night at 89% rate. So I want to take as many of these and turn them into that because they show higher.
Right.
And if it allows me to sell more cars, even better. And that really, to me, is what we are building towards with our strategy. For us, it becomes a time problem. And I think this will be the case for most dealerships too. Is if you're transacting in a store and you want to take, salesperson X and get them from 20 cars to 30 cars a month without having them work more hours, the only way to do that is shorten transaction time. And the only way to shorten transaction time, in my opinion, is by doing more of it online. Because if it's a subprime customer and it takes 4 hours to hang that paper, where they're in your showroom or they're sitting on their couch. But if it's an asynchronous experience for the consumer, it's a net positive because they feel like it's happening instantly. Reality was I have a buying center in our corporate facility that has finance managers with 20 years experience that are hanging paper digitally. And so for them, it's just a regular old car sale. But for a customer, they filled in an application, sat down and watched an episode of, Stranger Things, and came back and they were approved. So for them, it feels instant,
Right.
And we see that reflected in a couple different key metrics. One, my average cars sold per salesperson increases. My transaction gross profit per unit has stayed the same, if not grown. And my NPS scores have climbed. So all of those things are positive trends, meaning that the customers that transact in that space grow. And two things I'm going to add to this. One big thing that you'll hear from a lot of dealerships that are hesitant about this is they believe that customers will be scared off by high interest rates, or they won't select products because of their costs. And I'll push back on that incredibly hard because it just doesn't bear out in the numbers. And it just isn't true.
Yeah.
I'll gladly share a view status to my data studio with anybody who asks. And I might be unleashing a whole thing by saying that on this, but you can check out the numbers and you see it in real time. It happens. Customers self-select products on my VDPs 3.4 times. And so our product penetration actually increased when we showed them the numbers.
But do you attribute that to the education you mentioned that you're sharing?
When I say education, just so I'm clear, when I say education, I don't mean like, hey, we have these products. I mean, here's this product. Here's what it costs. Here's what it costs per month based on your self-selected financial situation. And it's added to your deal automatically.
Right.
You have to deselect it. So customers are exposed to these. One of the things that we didn't talk about with our structure is I don't have an F&I manager and I don't have an F&I box. The customer transaction happens with one salesperson at their desk, and then the entire tower of our management staff shares the gross of the entire deal. And so there is no fighting over the front and back of a deal. It all happens with the consumer all the way through the process.
Love that.
And then the other last thing I want to mention is I think that modern retail, not using the car specific term, but just what you would consider a modern retail company in our space today is a mix of digital and retail. I would just say the entry point is flipped, where it used to be I had a brick and mortar and then I started a website. Now you see like modern companies like Casper or Peloton or any of those kind of newer, larger groups, or Allbirds, or whatever, just pick one, right? They were all online first. They built the fan base, and then they said, okay, how do I get over this adoption curve? I'm going to start adding stores.
Right.
So people can kind of that Apple concept. I want people to touch and feel the product to get exposed to it in real time. And I think that in the car business, that's still going to be an important factor. And it shows itself in all the numbers. Like most customers still say they want to go to a dealership and they want to test drive. And then most customers say they hate the dealership experience, but it doesn't change the fact that they still said the first thing, And so you just have to work on improving that process, not trying to eliminate it entirely.
Yeah, no, that's very practical, and I wholeheartedly agree.
100%.
Yeah. No,
you said you had another question for Joel?
I had a quick one. And then I think we have to get to
everyone's favorite segment.
Everyone's favorite.
Right.
Oh, yeah,
I was curious, we talk a lot of new car dealers about EVs. Mm-hmm. How are you preparing for EVs, if at all, in the independent used space?
Yeah, I mean, we're preparing for it in the same way that I think as much as we can. I'd say right now is a really rocky time in the secondary market for EVs because of the volatility of new pricing, especially from what the moves that Tesla's been making.
Right.
They sent this shiver down the spine of every used car manager when it comes to pricing out an EV. And, our first exposure of that was when they made those first price cuts. I owned practically new Teslas that all of a sudden cost more than a new one. And that happened overnight. I mean, that was a slightly unprecedented move. But for us, one, it's training our technical staff. And then all of our stores have at least two two-stage chargers. And our larger ones have 4. And the reason we added those was when one of the things that makes us unique is my inventory is free flowing between our locations. You start to add vehicles with limited range that you can't just top off when they get to the store.
Right.
It became an issue. So like a customer would say, hey, I want to see this i3. And, they're at one store and I have to drive it from this store to the other store. No problem. Then the car gets there. They say, I want it. It's like, great. You don't have enough juice to get home. So you have to leave it overnight. Assuming it didn't have a range extender. I think that's the best thing that we can do. I think that the name of the company escapes me, but the automotive venture investment from Stephen Greenfield of the kind of Carfax for EVs. Industry, I think that's going to play a really important role. I think it's going to require a ton of education in the open market from a consumer's perspective to understand even what they're reading about. But that's a really important thing because that's what scares me the most right now. Right now there's no responsibility for disclosure of the quality and life of that battery.
The health,
and I don't know who's going to if they say it's a dealership's responsibility and then we have to all get test units, that's going to be a huge hit. That'll make, I think, a lot of players not want to do it. If it becomes the auction's responsibility, then buying, EVs from auction then become more valuable. And then on the secondary market, I mean, that's a whole thing. And then on top of that, the other little bit that qualifies a little bit is this new trend to making these cars less insurable because of the potential damage for the battery cell.
Right.
I think letting that pan out is a little bit weird. And all this really only applies to the secondhand market. You're buying new, you have manufacturer warranty, all that stuff is kind of the same. But yeah, that's the stuff that worries me. But, we've transacted in the space, we buy them. I always we're playing hot potato with an asset at the end of the day. I mean, I'm buying it low and selling it high. And yeah, it's way more complicated than that, but sometimes it isn't. We're just doing our best in that space.
Does your team, are you getting a sense that more customers are coming in asking about EVs or not?
Sure. Yeah, no, the lead volume we get on EVs is generally higher than a traditional ICE vehicle that would be kind of comparable in that space. I think there's just more curiosity overall and still, and even today, it's not like you can just go drive EVs. They're not everywhere. We happen to be a metropolitan area, but if I wasn't, it would be even more extreme in that scenario. But to us, it's just an important part of the market. It's not like your guest said last week to me, and many weeks ago for you guys. That market share is only going to continue to increase. And then once it finally does bridge into the affordability market, and for us, we're that temporary bridge in the used space. And when the used tax credit for EVs actually does kind of happen, that'll also change that. But yeah, in the short term, we're going to be the only affordable EVs for used EVs, and then the responsibility that will then mean, and how we have to deal with that will kind of continue to evolve as consumers and get more educated. And an anecdotal story for that I'll give is we had a customer return an i3 because the range extender turned on, and they said, "What? I bought an electric car. I didn't buy a gas car."
Interesting.
And we talked to her, explained it to her, and went through the whole process. And all this had been told to her beforehand. But she had never heard the engine kick on because you really can't make the engine kick on in that car. It has to just run out of electricity.
Right.
And she just didn't want it. She's like, I bought this car, so I never wanted to use gas again.
Wow.
And we ended up having to take her out of the car and find her another EV, which isn't a problem. We have a 7-day return policy, but it's just one of those things where where the general automotive trend is with education on what the difference is between a hybrid and electric and extended range electric. You're going to start adding hydrogen cells into this. It's not as simple as the everyday consumer, as we think it is, because we live in this space.
It's so true. I think there's so much education that still needs to take place when it comes to
so much.
Yeah.
Right.
The vehicles.
It's really, I think we could talk about this all day. It's really fascinating to think about used EVs and how that space is going to shake out.
Definitely.
And it's shaking out right before our eyes. So it's really,
they're going to keep getting more used. I mean, that's the thing. It's like, we're talking about in our space, it's very far and few between because 2 years ago, the market share on EVs was what, 2%?
Right.
And now I think, according to your guess, is 8%.
8.5%. Yeah.
And so again, you think about that, the ecosystem, that takes years. Those cars become used cars. They trickle through the systems. They get traded in or they get returned to the manufacturer if they're leased. All that stuff kind of has to happen. It just takes time. It's like we're making wine over here. You just have to wait for the barrels to age.
Right. That's right.
Well, Joel, I think we've reached the moment that everyone has been waiting for.
Oh, man.
Elliot, are you ready?
I don't know that I'm ready.
I've seen you making furious notes.
I'm sorry for all of our writers for my looking at my top of my bald head here. But,
for anyone watching on YouTube, we do not give a good view.
No.
Let's just say that. But Joel, for those that don't know, we're about to embark on a segment we like to call a Schor Thing. And Elliot here, he has some hot takes. He's got opinions all over the board. And we ask our guests to tell us, is that an opinion that is a Schor thing or not a Schor thing?
Right. And our first one here, unfortunately, is ruined because we've already talked about it.
That's okay.
And it was a softball to begin with. So now it's like an extra big beach ball for you, Joel. But
hit it up or hit it down? I don't know. Am I hitting a point or not?
Yeah,
that's not good.
So we talked about who is in the best position to win the used car market, right? A lot of people Vroom, Carvana. I saw a Vroom commercial watching the NBA playoffs, which was interesting.
Yeah.
Is it online only? Is it the franchise cars people? But I believe that actually it is the independent used car dealer that has a physical presence that is in the best position to actually win the used car market. Schor thing or not a Schor thing?
What a softball!
I said it.
Honestly, I don't
knock
think
that one out.
Softball as you think it is. So, are we defining CarMax as an independent? I mean, they are technically.
So actually, I was alluding to CarMax.
Yes.
Yeah. CarMax is the class of the field without a doubt. I mean, they have positive reactions to their negative quarterly earnings. That's how good they are. I mean, we always say here, if there's something that they're doing that we're not, what's up? And if there's something that we're doing that they're not, what's up? Just because they have, they have just built such an incredible model. And also, another thing too is that as a large group like them, their access to in-house lending is a unique thing in the independent space and gives them a little bit more of a layer of protection when it comes to like this year's financial instability, for instance. So it's a Schor thing for sure. And if anything, it's almost shocking how much they've allowed that space to grow outside of them and how I think almost slowly they're catching up to that UX online.
It's sort of undervalued that kind of model. And, it's in this all or nothing world we live in. It's got to be all online or it's kind of undervalued.
Well, yeah, I mean, also you can make the opposite argument is if someone like them isn't doing it, then maybe it just isn't financially possible at the way that Carvana has been doing it, for instance, because of the transactional costs of it. So I think finding that happy medium is an important factor.
Yep.
I almost don't want to give you credit for that one just because it was so easy.
You really?
All right, but we'll give it
Yes,
to
I guess I spiked the beach ball. Is that a good?
Yeah, you did.
Yeah.
It's 1 for 1.
Yeah. No, you made it something when I clearly had nothing.
Okay.
So thank you.
You're 1 for
But I did love your comment, and I'll reference it. You said the customer is my algorithm,
Yeah.
and I love that.
That's a great statement.
I stole that from an SEO talk I went to years ago, and it's great.
Who cares? We'll make it yours.
No one knows that. The whole car business is full of thievery.
That's right.
Of ideas, right? There's no new ideas in the car business. But so all right, that was number 1. That was supposed to be my business one. But well, since we're talking all things independent, right? Mm-hmm. And Mark and I like to catch a movie here and there.
We're usually terrible about recalling the facts of the
horrible about recalling them, but I did a little preparation.
Yes.
And because we're celebrating all things independent on this podcast, and independent movies are something that's really interesting. Major, like we were talking about, it's one of the things where the sort of the actors go for their freedom, right? The directors go so that they don't have a big
You're saying
studio
that are not the big studio, the independents.
And those are the ones that most of the time actually end up winning the awards and stuff. And so, I was thinking about, what is the best independent films of all time?
Okay.
Okay. And it's really hard to know what's an independent film, what's not.
Right.
It's a pretty easy answer, but yeah, go ahead.
I already
has one.
Some of the movies I considered in this, Napoleon Dynamite,
great movie.
Little Miss Sunshine, fantastic movie. Parasite won the Oscar a couple of years ago. Even Good Will Hunting is at the classic, another Oscar winner. Lost in Translation, one of my favorites. Really made me want to go visit Japan. Bill Murray in his prime. Dazed and Confused. Hey.
Really going back.
Yes, independent film. Yes. But I believe the best independent film of all time has to be Pulp Fiction. Right?
Yeah, that was my answer. There you go. Agreed. Sure thing.
Oh,
that was literally when you said it. I said it's easy. It's Pulp Fiction.
Look at that.
Well done.
I never thought we would be on the same page there, but
maybe it's our demographic.
That movie changed independent movies forever. That proved to smaller financiers that they could actually make money, and then it changed. The whole infrastructure of the film industry changed after Pulp Fiction.
It really did, and then it's I'm flabbergasted by that. I really
2 for 2. This is crazy.
Well,
can we finish 3 for 3?
There's no way we're going to finish 3 for 3, but. Joel, I had to dig deep in your LinkedIn profile for this one. And I understand, and like many of us when we're young, we get odd jobs of sorts. And you actually had this on your LinkedIn resume, so I figured I'd use it. But do I understand right? You worked a little bit at the Palm. Palm Steakhouse?
Yep.
Yeah.
I think it should be a legal requirement for people to work at a restaurant, by the way.
100%. I did too. I was a server as well.
I also judge the character of someone on how they treat their server.
Agreed.
True? 100%. Yes.
I worked in an Italian restaurant.
It's a sure thing.
Definitely. Well, we'll get to the short thing. So, it got us thinking. Mark and I were talking a little, knowing that you worked at the Palm, and there's one thing for sure about the car business and car people. They love a good steak. They love a good steak. There is no shortage of steakhouses that cater to car people. And so we started talking about the best, and this is a good debate that people have all the time, best steakhouses of all time. Could be a chain. We're not just going independent versus chains. We can go with anything here.
Okay.
And I have my Schor Thing. And I will stand by this to the death.
Okay.
But
very passionate about your steakhouse.
Yeah, I am very passionate. To me, the best steakhouse of all time. And yes, I did think about Hall's out in Charleston, great place, no doubt about it. But to me, the best steakhouse of all time has to be Peter Luger's in New York.
Peter Luger.
Yes. Okay. Peter Luger Steakhouse in New York.
I feel like you're going to have an opinion on this.
Not a sure.
I've never been. So I feel like you're going with these obscure. Is that a single point in New York?
No, it's a little bit of a chain.
It's a little bit of a chain. It's an oddball of a chain.
Yeah.
We did talk about this because
It's not as big as like a Capital Grill.
Oh,
Right.
no. Well, it only has 2 stores, but
But
it is the only one that actually has sauce, steak sauce distributed through major supermarkets nationwide.
all right.
So you can't find another steakhouse that has their sauce distributed like that besides for Peter Luger. But
All right. Before Elliot starts salivating over here, Joel, Schor Thing or not a sure thing?
I'm going to say not a sure thing.
oh,
Couldn't get the.
I knew
And mostly because I didn't want to give you 3. But secondarily, because I think you need to find a place that has a ton of options and not just good steak sauce. So, and also I feel like if you go to so steak sauces are great for home, but if you're out, you want like a hollandaise or something because you never make that at home, right? You need something ultra rich or something covered in mushrooms. You grill a steak on the weekend. You're not making a Delmonico at home. So you need someone that specializes in that. And
So what's your pick?
That's my pick. My pick, even though it's a safe choice, it has to be Capital One. And I'm sorry, Capital Grill.
You got financing on the brain.
There's actually a reason for it. One is I worked at the Palm too long to pick that place. And so, and also my dad has his picture at the Palm. He's right below.
Does he really?
Yeah. Our corporate office used to be across the street from there. So he ate there so much that he got up his palm points to get his face below the bushes. You always say that I'm below the bushes.
That's
and
what the
literally
points are for.
Yeah, exactly. But no, Capital. So I think Capital Grill is amazing. One is you eat at them at every conference you go to because they're consistent. They're easy. They have private rooms. Their calamari is arguably.
I love it.
Agreed.
Right? And also, I've recently become a vegetarian, and they do a mean grilled tofu. So
Really?
I want to throw that in there.
Wow.
So yeah, they do a great job, and everything's always so good there.
Mark, real quick, yours?
I have to agree. Capital Grill for me is the favorite.
Interesting.
But look at Joel
The
here.
location in DC is right next to the stadium for where the Wizards and the Capitals play. And it's this iconic little spot with I know all of them have lions, but it's actually like built into an old brick, like brownstone. So it just looks amazing.
Oh, wow.
Well,
That was
Joel,
my home one.
Really cool.
Joe, we have learned a ton, right? I mean, look, he's an independent used car dealer and a vegetarian. What other norms can he defy?
Seriously.
In one conversation.
Yeah.
Joel, we can't thank you enough, first of all, for reaching out to us.
Thank you, Joel.
For listening to the podcast, and now for coming on and sharing your insights that anyone in the car business can take away for some lessons learned and things that they should be thinking about in their business.
Yeah, definitely. What a great treat this was, Joel. Thank you for coming on. I think you've provided our listeners a lot to think about in terms of the independent space.
Absolutely.
Appreciate it. Honored to even be here. I'm a fan, and I'll keep being a fan. So thanks for having me. And any time that I can help any other dealers, that's always a benefit for me and for the industry overall.
Thanks so much, Joel.
Thanks, Joel.
Thanks.
Thank you so much for listening. Whether you are a dealer owner, GM, sales or service, or just starting your automotive career, you are sure to pick up some insights.
Oh, that's very slick. I like what you did there.
Appreciate it.
Well, in all seriousness, thank you for listening. We would really love if you could go on and leave us a review. Go ahead and hit subscribe. We're on YouTube for the video, Spotify, Apple, anywhere you can find a podcast, you can find us. We greatly appreciate you listening. Thank you, guys.